Florida insurance has always been a challenge. Hurricanes, flooding, wind, heat, salt air, and just the reality of living in a tropical state. It creates more risk for insurers than most places in the US, so you're already starting from a tougher baseline, because Florida has been ranked as one of the most expensive states for homeowner insurance. And here's what makes this so frustrating for buyers. You're already dealing with expensive real estate, interest rates, taxes, and HOA fees, and then insurance comes like this extra layer that can swing wildly from one property to the next. This is why I'm making this video, because the insurance nightmare usually isn't just one obvious thing. It's a perfect storm, no pun intended, of weather risk, older buildings, older roofs, deferred maintenance, and a system that for years got hammered by litigation and fraud. And just to underline the storm risk, Hurricane Helen is a good reminder of how big the numbers can get. The final estimate for Helen's total flood and wind losses was roughly $40 billion. And you'll see even higher estimates in some reporting when they're taking broader economic losses into account or combining storms. So today I'm gonna walk you through the 5 things that you need to know to avoid getting blindsided. And at the end of this video, I'll give you a simple, repeatable checklist that you can use on every property, because the goal is not perfect insurance, the goal is no surprises. Let's start with the one that catches people off guard the most: flood insurance. In general, a standard homeowner's policy typically does not cover flood damage. Flood is usually a separate policy, often through the National Flood Insurance Program. And the tricky part is this: people assume flood is only an issue if you're in a flood zone, but a meaningful chunk of the National Flood Insurance Plan claims came from properties outside of high-risk flood zones. So the real question is not, is this house in a flood zone, yes or no? It's more like, what is the flood risk for this specific property? Because Florida has a terrain where conditions can change from one street to the next. One street drains well, the next street doesn't. One house is elevated, the one behind it isn't. One neighborhood floods in heavy rain even without storm surge. And that's how you'll get the "I had no idea" stories. What does it cost? A lot of sources cite Florida insurance averages around $800 to $900 a year through the national program, but it can be significantly more depending on the risk. So here's the practical rule: get an insurance quote while you're in your due diligence period. If flood insurance might be needed, get a quote early. If it's not required, still understand what the risk looks like. Don't let flood insurance go from a monthly cost to an "I can't sleep at night" cost. This is the part that nobody wants to hear, but it matters. Florida had a long stretch where the insurance market wasn't just dealing with weather. It was dealing with a legal environment that produced a massive share of the nation's homeowner insurance lawsuits. The Insurance Information Institute summarized it this way: Florida generated about 79% of the US homeowners insurance lawsuits, while representing under 10% of its claims. Those losses get priced into premiums. It also explains why you've seen carriers pull back, go insolvent, or reduce exposure in Florida, and why homeowners end up getting non-renewed or forced to shop for a new carrier. And yes, fraud has definitely played a role, including abuse around roof claims in past years. That's why you will hear people talk about scenarios where a contractor shows up and says, "This roof is toast," and suddenly a claim is being pushed that may not even match the real condition of the roof. Here's the piece that I really want you to understand as a buyer. A lot of fraud doesn't show up like an obvious scam. It shows up like a confident sales pitch, usually when you're stressed out after a storm. One common pattern goes like this: a roofing company finds damage, encourages a claim, and if the claim is denied, they push the dispute into litigation. Now the insurer has to decide whether to settle or spend a fortune fighting it. Multiply that cycle by thousands of times across the state, and the losses get pushed onto everybody. After big storms, the incentives for fraud get even worse. The National Insurance Crime Bureau has warned that contractor fraud spikes after disasters. And on a national scale, they've estimated that up to 10% of disaster-related spending can be lost to fraud, which they peg to be about $9.3 billion a year. And we're not just talking about theory here. We've seen real cases. For example, there were roofing businesses in Jacksonville sentenced to a multi-million-dollar fraud scheme. And there have been additional investigations and charges around fraudulent roof claim patterns in Florida over the last couple of years. So if you hear any version of "don't worry, your insurance will pay for it," "we can get you a free roof," "sign here and we'll handle everything," or my personal favorite, "we'll waive your deductible," that's where you want to pause. because in Florida, there are laws specifically targeting these practices, including deductible waiver schemes, and the state has moved to clamp down on solicitation in the way that claims get pursued. The point for you as a buyer is not to become an insurance expert. The point is to understand that this is a sensitive market, so carriers can be picky. Your outcome depends heavily on the property's risk profile and the documentation that you can provide. This is where smart buyers win. In Florida, insurance is not just about a nice house versus a not nice house. It's about how the house performs in a storm and how easily the insurer can verify that. Some of the biggest levers for single-family homes are roof age and roof type, roof permits and documentation, wind mitigation features like tie-downs or secondary water barriers, impact windows and doors or shutters, construction type, location and wind exposure, and claims history. This is why two homes can look identical online, but one is $3,000 more a year to insure. And here's something that I want you to take seriously. In Florida, the roof isn't just a roof. It's often the difference between getting insured easily and getting insured expensively, or having a really hard time finding insurance at all. So the question is not just, is the roof in good shape? It's also, how old is it? Is it permitted? Can we prove it? Is it built and attached in a way that earns credits? This is why wind mitigation reports matter. They capture credits that can move the premium. And if these credits aren't documented properly, you can be paying more than you should be. So your action step here is simple. Before you get emotionally attached to a house, ask about the roof age and whether there are permits or a wind mitigation report. If not, plan to get one during your inspection period. And if you're deciding between two houses and one has impact windows and a newer permitted roof, give that serious weight in your decision making. That's real money that you'll be saving or spending every month. Now let's talk about condos, because condos are where the insurance nightmare can really get confusing. In a condo, you're not just insuring your unit, you're tied to the entire building's master policy and the building's risk profile. And Florida has a lot of condo inventory that was built decades ago, especially in South Florida, where older buildings can have deferred maintenance and systems that are expensive to update. After Surfside, Florida passed condo safety requirements that increased inspections and reserve planning. That's good for safety, but it can increase costs and it can expose buildings that have been kicking the can down the road. Buildings kept the HOA fees low by deferring maintenance. Owners loved the low monthly HOA fees, and then the insurance renewals hit. Costs jump, and suddenly. HOA dues rise sharply, special assessments are imposed, or the building is forced to scramble to meet reserve requirements. That's the nightmare, not because condos are bad, but because some buyers don't underwrite the building. So if you're looking at condos, you want to review the master insurance policy and recent increases, deductibles and what's covered, reserves and reserve planning, inspection status and upcoming projects, history of claims, and whether the building is proactively maintaining things like the roof, concrete restoration, plumbing, electrical, and elevators. Because a great deal condo can become a not great deal very quickly if the building is behind. Now let's talk solutions and end this on a realistic but positive note. Citizens is Florida's insurer of last resort, the backstop when the private market is uninsurable or unavailable. Citizens also has rules that can push policyholders back into the private market when the offer is within a certain threshold, and the state has been actively trying to depopulate Citizens as private insurers return. There have been signals of movement in this direction. Citizens reported that in 2025, more than 546,000 policies were transferred to private insurers through depopulation efforts, and it's noted that carriers are returning to the market after reforms. What changed? Florida passed multiple rounds of property insurance reforms aimed at reducing litigation incentives, tightening up claims practices, and improving reinsurance availability, basically trying to make Florida a more predictable place for insurers to do business. And we are seeing evidence of stabilization in a few areas. Litigation has significantly dropped compared to prior peaks, and Florida's insurance regulator has publicly discussed new companies entering the market and the post-reform environment. Does that mean insurance is now cheap? Not necessarily, but it does mean that your strategy matters, because the difference between a smooth experience and a nightmare is usually how you buy. Here's the checklist that I promised, and I generally recommend that you treat it like a routine with every home you consider. Step 1, get a quote early. Don't wait until the contract goes hard. Utilize your due diligence period to understand your insurance costs and requirements. Step 2, separate flood from homeowner's insurance in your head. Understand that flood is often separate and claims happen outside the highest risk zones too. Step 3, treat the roof like a financial asset. What's the age, the type, the permits, and the documentation can change your quote significantly. Step 4, capture wind mitigation credits. Impact windows, storm protection, roof attachment, these aren't just upgrades, they're often insurance leverage. Step 5, for condos, underwrite the building. Look into the master policy, reserves, inspections, planned projects, and potential assessments. Step 6, have a backup plan. Know what Citizens is and when it's relevant, and understand that you may move between carriers as the market shifts. Look, people don't move to Florida because it's simple. They move here because the lifestyle is real. Beaches, boating, golf in January, sunlight, the energy of fast-growing cities, business opportunities, and tax advantages that make the math work for a lot of families. Insurance is just part of the cost of entry, but if you buy smart, if you run the numbers early, and you choose properties that insurers view as low risk, you can absolutely avoid the nightmare and still get everything people love about living here. If you're planning a move and you want help stress testing a house or a condo building before you write an offer, reach out. I'd rather you find out the truth up front than discover it the expensive way. I'm Joel Poulin, Palm Beach real estate broker. Thanks for watching, and I'll see you in the next video.